Good morning and welcome everybody to another episode of Minds and Money TV here joint with our partners at Red Cloud. I'm joined today by Alexander Scanlon from Barton Gold. Alexander, how are you doing today?
Doing well, thank you.
Great to have you with us. So just in case we have any viewers who aren't familiar with yourself, with the project, give us a brief background on you, how you ended up involved with Barton Gold and what the project has looked like so far.
Yeah, look, my background is a combination of economics and structured investments. So basically principal investments in structured products and natural resources, primarily in the real asset space. Barton Gold was born out of a sort of multifamily office that I was running back in 2016, 2017, 2018. And that was really predicated based upon taking a long-term macroeconomic view of the world, looking at things like corporate and consumer and sovereign credit, looking at geopolitical instability, both domestic and internationally, and then looking at sort of other facets of risk around the world, and really looking at gold from the sort of de-dollarization and remonetization standpoint, and taking the long-term view that gold is a really exciting place to be. We've seen some of these things come to pass, of course, and we never could have predicted something like COVID, but many of the factors that we predicted on sort of the credit and geopolitical standpoints have come to pass. And then Barton Gold itself, in terms of the assets, was really a strategy around identifying and consolidating a series of assets that were probably underrepresented or underrecognized in the markets. We essentially went in and consolidated every significant historical and production asset, I should say historical exploration and producing asset, in the central Gawler Craton of South Australia. We also bought the only gold mill in the region. And so around that, we've now built about a 5,000 square kilometer tenement package. We've got a couple of major projects, and we are building up a multi-million ounce resource base to restart production in sort of a staged, lower cost, lower risk basis using our existing mill. And we're targeting scaling up to about 150,000 ounces per annum as we turn on each project successively.
Wow, sounds like an exciting time to be involved in the gold market. Just talk to me about jurisdiction. What made you choose Central Australia? What was it about those properties that have attracted you? And obviously, you decided to consolidate multiple properties altogether. So how does that process look like?
Yeah, look, South Australia is quite attractive as a mining jurisdiction. When we're thinking about it from the gold standpoint, the state actually has about 25% of Australia's known gold resources, but represents only about 2.5% of gold production. So that caught our attention, and that really is a legacy of very heavy investment in the copper and uranium sectors. So in the center of South Australia, so we're in the center of the Gawler Craton. The Gawler Craton is a pretty globally renowned geological domain. And in that center there, you have the IOCG belt, where BHP has just consolidated Olympic Dam, Carrapateena, and Prominent Hill with the acquisition of Oz Minerals. That sort of is an IOCG belt running up through the center of the state, and then about 200 kilometers to the west, kind of on the other side of the highway, if you will, there is an historical gold province. So this has produced high-grade gold for about 130 years. It was the site of South Australia's high-grade gold rush in the late 1800s. Fast forward 120 years or so, there was a small high-grade pit producing from our assets. There was a high-grade underground mine, which we also now own. So we just looked at that and said, look, this is a very clear trend here in an established jurisdiction. You've got tier 1 rule of law, tier 1 mining expertise and personnel, and it's a state where you can really actually make some pretty significant moves without kind of people noticing, and that's what we did. And now people are certainly paying attention to the sort of the story unfolding in the region.
Yeah, no, absolutely. Interesting time to be in the gold market. Yeah, I think a number of, and we'll go more into depth in this slightly later on, but I'm sure a lot of your peers in gold exploration may be slightly frustrated, shall we say, with their current performance. Not so much on your end, though. Talk to us about 2023. There's a lot of positive advances coming along. So what made them, well, first of all, tell the viewers about what they are, and more importantly, what made them possible, what factors you think differentiated you from the rest of your peers in this sector.
Yeah, so 2023 was a very big year for us. It was in many ways sort of a culmination of a couple of years of very intensive work programs that we've had going on both our Tarcoola project and our Tunkillia project. If we think about sort of, the headline target for resource growth and development. It's resource ounces growth. At our Tunkillia project, we had two pretty significant resource upgrades during the year. So in April of 2023, we added 189,000 ounces of gold. And then we mobilized another follow-up program. We drilled another 11,000 meters on the same assets and converted another gold zone, added another 224,000 ounces of gold. So we added over 400,000 ounces in the 2023 year. But really importantly, we actually did that at an all-in cost of discovery per ounce of about 14 Australian dollars. So really bottom of the global cost curve in terms of discovery costs. And that $14 per ounce Australian is a true all-in cost. So that's it's drilling and it's assaying and logistics and labor and all of these things, whereas most people will typically just quote drilling cost. Separately, at the neighboring project, which is 45 miles away, we have just published at the end of November a new regional structural model that allows us to see for the first time 130 years of essentially high-grade gold discovery and mining history in a consistent structural framework. So we're really kind of building up a platform for these two assets. And the reason we've been able to do this so efficiently is we invest a lot in both R&D and just sort of background work before we go and drill. So we tend to be a very specific driller instead of large-scale pattern drilling, if you will.
Mm-hmm.
This means we invest more time and money up front, but then we're aiming more specifically. And if we have a successful intersection, we're sort of validating our theory, and then we're back onto that very aggressively. So we can follow up faster. We can rotate results and growth faster than the sort of traditional sort of scattergun style approach. One of the other things that has enabled that is the fact that we're very well capitalized, right? And we're very well capitalized because, among other things, we also monetize our assets. So we obviously work very hard to secure, grant and tax rebates and these types of things that can help subsidize your exploration. But we also actively monetize our assets. So when we bought our projects and our mines and our mill, we also acquired everything around them. And there's a lot of stuff that we have out there that is absolutely not necessary for our long-term strategy. So we've been able to dispose of some of this equipment and generate capital from that. But we've also been generating gold and concentrates from successive cleanouts of our mill as we're doing work programs to look at how we reanimate that mill. So we've generated about 2,000 ounces of gold out of that mill. We sold about $1.5 million worth of that last year. And we've just opened a tender right now to sell about 1,400 ounces, which is about 4.3 million Australian dollars contained gold value. So we're on track to generate about $10 million in additional non-dilutive free cash. That's obviously been great for us to be able to keep doing work while everyone else has sort of had to hold back. Mm. And it also means that we've been able to sort of, to keep advancing without sort of going to market frequently, tapping shareholders in the down market. And of course, it means we're not diluting as much relative to our peers. If you look at our share register, we IPO'd 2 years and 8 months ago, and our IPO shareholders still represent, over 90% of our share register.
Wow. And then, that brings us on to the next thing I wanted to ask you about. So I think, right now, if you're maybe a Randy Smallwood, for example, or a Mark Bristow, you're going to be very, very happy with the gold prices. Also, obviously, if you're Alexander Scanlon. I think in a number of cases, though, we're seeing perhaps a disconnect that is interesting to explore between what is a historically fairly strong gold price and performance. And again, this doesn't necessarily apply to yourselves, but I'd be interested to just get your view of the sector writ large of gold exploration equities on either, whether it be the ASX or TSX. There's a degree of underperformance relative to how strongly the actual commodity is performing. What do you think is behind that? And I suppose more importantly, what are the implications for the sector at large?
I think there are a lot of factors behind that, and probably you can break it down into various different periods of time. But in the really big boom markets that we've had in equity, in very simple terms, it's been easier for people to make returns out of really fast, exciting stories on the tech side of things, as opposed to minerals, but in particular gold. Gold's been perceived as an old-fashioned thing for a while now, but mean, I hear and have heard now similar things that I heard back in 1999, like gold is dead, technology is the new gold, blah, blah, blah. And then we see, big upswings in the gold price as we did from 2002 to 2008. And then things kind of held out a little bit, sort of stable 2008 and 9. And then boom, they take off again post GFC, but not immediately, right? It was sort of 14 months after Lehman's fell that gold took off again. And the real driver, the big driver of gold, which comes back into the market thing, is what we're seeing is gold reacting to essentially sort of everyone's talking about sort of fiscal dominance and budgetary policy and monetary policy and these types of things. But essentially, central bank issuance of credit, the injection of credit in the market is driving sort of everything bubbles in the paper asset space. It's been depriving capital from gold equities, but it's actually driving the gold value up, as in particular from kind of the 20 teens on, central banks have stopped banking their foreign exchange reserves in USDs. And there's been a huge divergence in US treasuries and gold holdings in terms of central banks buying much more gold than US treasuries. That's a geopolitical effect as well of a number of sort of conflicts and disagreements. But still we arrive at a period of time, as you pointed out, where the gold price is effectively weighted average all-time highs, and yet gold equities are quite suppressed. And I think that is, it'd be easy to say that that's negative sentiment, but I think the more accurate interpretation is it's just a lack of attention at the moment. A lot of hot money has been chasing something that's been kind of frothy and exciting, for 12 to 18 months, going through various different sectors. But these bubbles are inflating and kind of bursting much more quickly. Obviously, the sort of critical minerals bubble we have seen kind of inflate quite wildly. Rare earths, as they did in 2011, kind of inflated and then contracted. Lithium stocks inflated very heavily and have now contracted very heavily. So this money is splashing around, and I do think there will be a point in time, particularly as rates start to get cut again by central banks, probably mid 2024, where money starts to look for real yield or defense against debasement. And you'll see institutional capital looking more at gold. And once that happens, you'll see retail moving at it as well.
Well, there you have it, folks. Certainly gold exploration CEOs take note, because I think all of that is going to be highly relevant for how people sort of strategize and position themselves in the next sort of 12 to 18 months or so. It wouldn't be a mining interview in 2024 if we didn't talk about ESG. So we're going to cover it. Just give us a brief sort of summary. What's your approach to ESG? Granted, in the exploration sector, the E element of things tends to be not less relevant per se, but less actionable and less operationally concerning. What's been your approach? How have you engaged with local communities? Because obviously, often that can be a big hurdle for people, particularly in South Central Australia.
Yeah, no. So very, very good questions. All look, if you take them in reverse, start with G. Governance for us is really central to how we do things. We've built a way of doing things internally that's much more akin to kind of a mid-tier style company. If you look at our board, our leadership team, we've got between us about probably over 200 years exploring for permitting, financing, developing, and operating major mining assets with a particularly strong pedigree in gold and in South Australia. And that experience transcends not just sort of financing and operations, but also legal, social engagement. So we have the former general counsel of Santos Limited on our board as well. So we have built sort of processes, policies, and a framework of how we work, which is really focused on the governance side of things. Social, we have very, very strong relationships with all of our stakeholders. And obviously these are stakeholders that are federal down to state, and then local sort of pastoral and native title stakeholders. So we have native title mining agreements for exploration or production over probably 98% of all of our ground in South Australia. And we work very actively with our native title partners, and then also the local pastoral pastoral title holders. When we're looking at exploring anything or doing anything, we're out there with them, we're engaged with them. We're a part of the fabric of the local community. we've been out there now for 5-6 years on the ground, really building these relationships, and then working very closely with the state as well to not only do what we're supposed to be doing well, but to help work with the state to define the state's strategies and policies going forward. So we get involved in consultation on mining law, amendments, regulations, all these types of things. Then on the east side of things, as you're right, we're not operating, so it's kind of hard to sort of point to high volume actionable things that tick the e-box. But one of the benefits of our exploration methodology, the strategy of using a whole bunch of new tools and we investing a lot in R&D, essentially what we are doing is we are trying to identify probable structures or attractive structures at depth and test those very specifically with a few holes instead of a blanket of 400 air core holes and then round after round and round of successive drilling. So what we try to do is 6 holes instead of 60. And in simple terms, what that generates is more precise targeting. We have had a very significant or very high hit rate, so probably north of 80% of our holes that we drill hit structure and or gold. So we're able to validate our theses, validate our structural models more accurately and more quickly, but it means we're drilling fewer meters to test the same thing. So we are actually burning quite a lot less diesel for the same growth and performance that many of our peers have. And then when we look forward, we have the benefit of standing still right now, but we've got a mill that has been traditionally 100% diesel powered. Because we have the benefit of standing still, we have time to think about, hey, can we swap in some solar and battery storage as sort of the baseload power generation to provide, say, 50 to 60% of that mill in terms of its energy consumption? When we look at sort of shifting or expanding camps, do we put solar arrays in to provide most of that power, particularly through the night? That's good for diesel consumption and emissions, but it's also good for having a quieter camp and a healthier kind of sleep environment.
Right.
So there's a lot of things we think about, and there's a lot of things we're planning on doing as we take steps going forward.
Brilliant. I think that last point, it's not something I often hear mining leaders really go into, but I do think it's important. The environment for staff comes under, I suppose, your G and your S, and making sure that the well-being is properly taken care of. Obviously, yeah. In a producing mine, it gets even more so. But even in exploration stages, heavy drilling equipment is potentially very dangerous work. Making sure people are tip top and ready to perform, I think, is actually quite an underrated part of that package. Yeah. I suppose we're nearly out of time now, so just running off, what should we be expecting in 2024? How can potential investors reach you and get a hold of you? So what does the outlook look like in the immediate term?
So 2024 is getting ready to start essentially as busy as 2023 ended. When we did our major drilling program to do our December 2023 resources upgrade, we also did another 10,000 meters of drilling on a few local targets, including one satellite gold zone that we found back in 2021 and grew in 2022 and 2023. So we've got about 4,000 meters on that new gold zone. We're expecting to get those results back quite soon. We're hoping that we'll be able to convert that area into new JORC resource as early as March. We have also drilled some regional growth targets, and we're testing that both for gold, but also multi-element analysis to see if there's potentially base metals credits to be pursued there. We are going to be drilling on our existing high-grade open pit at Tarcoola starting around the end of March. And we're also working on a number of analyses to say, hey, can we look at processing some of our existing stockpiles that we already have next to our mill to produce further high-grade concentrates? And of course, we're selling our sort of current 11-ton, 1,400 ounces of high-grade gold in concentrate. So we'll have a pretty steady amount of news going through the middle of the year, potentially 2 JORC resource upgrades over the coming 4 to 5 months. And we have a pretty strong track record of surprising people with corporate initiatives that we would hope to be continuing as we get into the year.
Perfect. Well, listen, Alex, it's been an absolute pleasure to be joined with you here today. I've been Jonathon Leader from Mines and Money, joined by Alexander Scanlon of Barton Gold. Alex, thank you very much for your time, and I look forward to seeing you on the circuit soon.
Yeah, thank you.
part of the solution to the problems that we're facing in the global climate. And therefore, conferences like these need to bring together people for collaboration, because that's where really exciting, innovative things are being done in our space.
What is done here with the global mining industry is going to be a key factor in our ability to drive the energy transition at the pace that's necessary to avert crisis in our climate system.
There are some major companies from around the world that are here, and I've had a chance to meet with them today, and will continue. Some of the biggest players in the world that are already investing in the Yukon.
Coming together at an event like this really allows to maintain that conversation and facing some of those challenges together as an industry, as an ecosystem.
When it comes to AI and leveraging these technologies, we don't think that AI is an area where we should be driving competitive advantage. We think that this is an area where we should be much more focused on collaboration.
We're really beginning our work in terms of rethinking the way that we invest into the mining sector, and the opportunity just to hear the breadth of views to help shape our thinking is really important.
The young people that are here at this conference, thanks to the organizers, they are going to be the voice of conscience for us, to help us see the kind of industry that we need to build. It doesn't happen very often, so I'm really looking forward to that intergenerational conversation.